A handful of stocks have been flagged by my Stockopedia filters that I felt compelled to buy, all big American household names.
With the market price as highly as it is, we've been cautious in recent months about buying stocks, but while the S&P 500 seems crazily high right now, it's simply not true that the whole market is overpriced. There's some genuine bargains out there on some brilliant companies.
In this video, we're deep diving into the fundamentals of 3 wicked stocks that I've just added to my portfolio. You can decide for yourself if you want to buy them too. Let's check it out.
Intel. Perhaps a controversial pick, since by all accounts Intel has been struggling recently, but its pricing, future growth potential and relevance to US national security are not to be ignored.
The eyes of the world are on the microchip industry. Pretty much all modern technologies use them, including the electric vehicles which underpin the hopes of the Green Revolution. But there has been a global semiconductor shortage since the start of the pandemic, which has disrupted supply chains and caused demand to outstrip supply.
Some companies are doing better than others at handling this, and admittedly, Intel has fallen behind the likes of rivals AMD and Taiwan semiconductor manufacturing company known as TSMC. Indeed, while AMD's stock price is soaring, Intel's is where it sat a year ago. So what's gone wrong for Intel?
It has failed to keep up with Eastern manufacturers in the global processor race, with Korea's Samsung and Taiwan's TSMC better placed to take advantage of component shortages throughout the pandemic. US-based rival AMD has pulled ahead during the last couple of years, partly by outsourcing some of its production to TSMC in Taiwan, who've been less affected by supply chain issues, while Intel produces its chips domestically in the US.
And Intel's Q3 results announced in October were disappointing to a market demanding a fast turnaround, as evidenced by this sharp drop in the share price at the time. But your decision to invest shouldn't hang too much on what the share price has done in the past. We think Intel is now priced too cheaply and has a lot going for it over the next 2 to 3 years.
Looking at Intel's finances on Stockopedia, its PE ratio is very cheap for a US tech stock at just 13. A more useful alternative to the traditional PE ratio, we think, is the EV to EBITDA ratio, as it factors in the company's debt. Intel has an EV to EBITDA of just 6. AMD, for comparison, has a PE of 45 and an EV to EBITDA of 52. Compared to the competition, Intel is as cheap as chips, pardon the pun.
There is a sea of green metrics in terms of quality and health. The company pays a healthy and growing dividend and is extremely well covered for it, and its net debt is small at just 1/3 of operating profit. Intel is not a popular stock at the moment with the big investment banks and lacks price momentum. Let us lay out the case to why we think the market is being short-sighted with this stock.
The financial analysis in this video is made possible with our subscription to stock analysis website Stockopedia. It's how we pick all our stocks. No free service can stack up to its awesome analysis power. If you want to try it out for yourself, the link on moneyunshackled.com will give you a 14-day free trial, followed by a 25% discount off your subscription if you like the service.
Intel is currently undergoing several key upgrades to its business. It's in the process of bringing new manufacturing plants online, retrofitting existing ones for better chips, and debugging its 7nm manufacturing process before it goes online in 2023.
Growing national security concerns will also likely play into Intel's hands. Intel is one of only a handful of US chip makers still producing chips domestically. Most others, including AMD, rely heavily on Eastern manufacturers. The pandemic and the trade wars with China have highlighted the need for domestic supply chains.
Feeling threatened by China, America has taken huge steps in areas like energy and food to be self-sufficient, and next on the agenda is being self-sufficient in technology. Because of this, Intel is on the shortlist of US companies most likely to benefit from planned government subsidies of $52 billion of semiconductor investment. That figure may even rise.
This highly anticipated public investment, combined with extremely high demand for Taiwanese production capacity, could see Intel's fortunes turn around. Unlike AMD, Intel doesn't have to fight for capacity. It owns its own factories and is investing in more.
Meta platforms. You, like everyone else on the planet, when they first heard that name, probably said to yourself, who? Household name Facebook, like Google before them, have rebranded their company name to something no one has heard of. But the new name is part of the reason why we think this stock is a buy, due to what that name represents.
In October, Mark Zuckerberg announced that Facebook was heading into the metaverse, his grandiose vision of where the internet is heading over the next few years. The metaverse is essentially an all-encompassing fusion of reality with a 3D version of the internet.
For example, picture yourself walking down the street wearing your metaverse-enabled glasses, and an information bubble pops up over a car that you like the look of. You click on it and get sucked into a virtual dealership to take a digital version of the car for a test ride. In Zuckerberg's own words, you're going to be able to do almost anything you can imagine, get together with friends and family, work, learn, play, shop, create, as well as entirely new categories that don't really fit how we think about computers or phones today.
Everyone else is on board too, with China showing an interest, Microsoft trying to develop their own metaverse tech, and Disney laying plans to become the happiest place in the metaverse. Zuckerberg has pledged to focus all resources on making the metaverse a reality. It's great when companies have a vision and are at the cutting edge of what's possible. It's what you want from a tech stock. Let's look at Meta's finances next and see if they stack up.
Meta's share price has fallen recently, out of line with the rest of the Nasdaq, which has rocketed upwards. Meta is another nicely priced tech stock, this one having a PE ratio of 23 and an EV to EBITDA of 15. We see big things in Meta's future, and again this stock feels cheap. We already liked the look of Facebook's existing business and growth, and the new metaverse is just the icing on the cake.
Facebook has a track record of incredible earnings growth, and this is expected to continue with 2022 earnings forecasts of $140 billion, double what it was making in 2019. And these are translating into real profits in the here and now, with awesome earnings per share growth year on year.
Meta has high quality and health metrics. Incredibly, for a company with such epic growth plans as rebuilding the internet, it has negative debt. It's actually sitting on $57 billion of cash net of debt. This puts Meta in a great position to take on debt in the future if needed to fund its expansion.
As well as great finances, a relatively cheap share price for a tech stock, and an innovative growth plan at the frontier of technological advancement, Meta also has the social media market pretty much wrapped up in the West. Meta owns Instagram, WhatsApp, and of course the Facebook platform. No explanation is needed for these.
If you want to know where you can buy the stocks being discussed in this video, some great investment platforms are listed on the Money Unshackled offers page and covered in more detail on our best investment platforms page. Freetrade and Stake are both offering free stocks, potentially worth hundreds of pounds to new customers when you sign up with our link. Check them out and grab your free stocks.
Coinbase. Now for a more speculative investment. If, like me, you're fascinated with the crypto craze but wouldn't know where to start looking for the next coin that's going to the moon, an alternative is to invest in a stock that has heavy exposure to the success or failure of the entire crypto universe. Coinbase is the world's second largest crypto exchange and is probably the most reputable one. The world's largest, Binance, is not yet publicly traded and has had run-ins with the FCA.
Coinbase is another Nasdaq listed stock, but this one has a limited financial history due to the infancy of the company and only launching publicly onto the stock market in April 2021, though Stockopedia helpfully has data going back to 2019 from before it went public. There's not too much to take from its financial history, other than it has no debt and it's viewed as a quality company. Oh, and all the brokers are saying it's a buy.
The share price has surged recently with the success of cryptocurrencies over the last couple of months, which has attracted more and more people to the platform and more trading, which is good news for Coinbase. Bitcoin, for instance, is up 34% since the start of October. Look how users have shot up over the last couple of years. The figure here for 2021 is actually out of date. It's now 73 million, more than double its average 2020 user base.
With most cryptos going up, it also boosts Coinbase's own portfolio of coins and tokens, which it holds on its balance sheet. CEO Brian Armstrong said, "We recently received board approval to purchase over $500 million of crypto on our balance sheet to add to our existing holdings, and we'll be investing 10% of all profit going forward in crypto." So if you're not sure how to invest in crypto yourself, another advantage of owning this exchange is that they are also investing in crypto for you.
The recent share price surge has had a big impact on the PE ratio and EV to EBITDA. The PE is higher than the current Nasdaq average, and EV to EBITDA isn't cheap either. However, tech stocks need to be looked at a little differently when it comes to these price metrics. Tech stocks tend to be priced highly relative to other stocks because people are investing based on high future expected profits and theories of what the future could look like, rather than on current profitability.
In that context, these metrics may not be so bad if you believe in the technology of cryptocurrencies and their influence on the future economy. Incidentally, this point about tech stock pricing adds even more weight to our comments earlier that Intel and Facebook are priced cheaply.
Why do we say this investment is a speculative one? For one thing, the full response from world governments about how to regulate crypto has not yet been seen. The direction of travel is towards more and heavier regulation. At the extremes, Coinbase could be banned. The FCA in the UK has already made moves to ban Coinbase's main competitor, Binance. One of Binance's crimes was offering crypto derivatives, which the FCA didn't like.
It's also speculative because, like any of the coins on its exchange, Coinbase is tied to the success or failure of cryptocurrency technology in general. If it turns out that there is no mainstream practical use for either the coins or the blockchains, then crypto may be consigned to history.
More likely, we think, is that there is value in the technology. It's just difficult to say which coins will end up in widespread usage. But no matter which currencies triumph, owning the Coinbase exchange means you'll be able to ride the general market wave.
Coinbase's mission goes beyond being the crypto exchange of choice. Their ultimate vision is to create a new open financial system. In fact, they're raising $2 billion from bond sales to pursue this vision, starting with a wider rollout of its crypto debit card and Bitcoin lending service. There's huge growth potential for platforms like Coinbase. We expect the biggest winners from crypto will be the exchanges which charge fees on them.
Question of the day. What stocks are you buying right now? And what do you think of these three? Join the conversation in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.